Welcome back, folks, to Investor Diaries. A stock that has taken a heavy and unfair beating over the last year is FuboTV. FuboTV, which trades on the New York Stock Exchange under the ticker symbol FUBO, is having no difficulty rapidly growing revenues and subscribers. However, the stock performance paints a totally different picture.
And folks, if you've not already done so, smash the subscribe button right now. We have a lot of exciting stuff planned, and you will definitely not want to miss any of those. So now what exactly is FuboTV? Should FuboTV be part of your trading strategy? Is this something you should consider? Should you buy, hold, or sell FuboTV? Let's find out in today's video.
So FuboTV Inc., it's an American streaming television service servicing customers in United States, Canada, and Spain. And it focuses primarily on channels that distribute live sports. Now, depending on the country, the channels offered by Fubo may include access to EPL, NFL, MLB, NBA, NHL, even MLS, CPL, and other international soccer games.
Launched on Jan 1st, 2015, as a soccer streaming service, FuboTV changed to an all-sports service model in 2017 and then to a virtual multi-channel video programming distributor.
All right, so in November of 2021, the company said that it had reached 1 million subscriber mark. By the end of 2021, FuboTV reached 1.13 million subscribers. And it said that it had reached record growth in the fourth quarter of 2021 with $638 million in total revenue for the year.
Let's also take a look at the stock performance. The stock is down 80% over the past year, with a high of $43.28 and a low of around $6. This is some serious volatility, folks. Our thesis is simple. This is one of the least understood stocks. We feel that the stock will go back to its all-time highs fairly soon. At these levels, the stock is a screaming buy. It is grossly undervalued, and the most recent wider market sell-off has been a massive contributor to the stock being so depreciated.
FuboTV announced its financial results for Q4 2021 and full year 2021 recently.
Now, despite $1 million spent on the acquisition of the French company Molotov, FuboTV achieved an increased revenue of 144% over 2020. FuboTV delivered record annual revenue of $638 million total revenue in 2021, including $1 million impact of the December 2021 acquisition of Molotov.
In terms of subscribers, the company closed 2021 with 1.13 million paid subscribers. And mind you, this number is actually up 106% from the prior year. If I look at the fourth quarter specifically, FuboTV actually ended up adding 185,000 net subscribers in the final quarter.
FuboTV also achieved record year-over-year growth during the fourth quarter of 2021. And the figures for the fourth quarter were $231 million total revenue, including $1 million impact of Molotov. With respect to advertising revenue, FuboTV recorded $26.1 million, including $0.2 million impact of Molotov. Additionally, FuboTV customers streamed 404 million hours of content during the quarter, and 96% increase year over year.
All right, so let's put this into perspective. These milestones exceed the preliminary fourth quarter 2021 results announced on January 10th, 2022. So folks, as you can see, this is a new age company. This is growing its subscriber base. It's growing its revenue, and the stock price therefore is unfairly punished. So we are very bullish about FuboTV.
Absolutely. The top line momentum is tremendous, but investors are probably concerned about the costs required to attract new subscribers. We think this is one place where people do not really understand the company. It is a young age company, and it is understandable that there will be losses in the near term. At this stage, we are focused only on the top line growth.
Absolutely, Nidesh. So if I look at David Gandler, who's the co-founder and CEO, he said, and I quote, "Our focus is on innovating our product to meet customer preferences and drive a premium experience. Our expansion into real money wagering is underway with the launch of Fubo Sportsbook across 2 states, with additional states expected to follow this year. This launch represents a differentiated and industry first integration of streaming and a sports wagering product, and we see ourselves in the very early innings of a massive opportunity.
FuboTV is attracting subscribers by offering an unrivaled menu of live sports, integrated sports betting, and new features like multi-view, which allows viewers to watch up to 4 channels and live game start feeds.
Management expects revenues to grow at 70% and subscribers to grow at 33% in 2022. Now, you might be wondering, what is the reason why Fubo TV's stock price is actually fallen so much? Now, there are a couple of reasons. First, you could think that it could be the level of deceleration over the 2021 growth numbers. It could also be because the cost has increased, or it could be because the expectations in the stock is low because it's already dipped so much. So based on these parameters, I think that Fubo TV is well positioned to capitalize on its recent momentum, on the decline of cable TV as well. So the shares at this point represent a great value, and the company will continue to build on its momentum.
Now, let's look at some of the analyst reactions. JP Morgan cut its rating to neutral from overweight, suggesting that subscribers are at a risk of near-term drop-off with the passing of Super Bowl, and additionally lacking key sports content for March NCAA basketball tournaments.
Wedbush, in the other hand, is staying positive despite a bit of a reset, reiterating its outperform rating. Analyst Michael Pachter said that it's a long road to profitability, but Fubo TV continues to move forward on the company's strategy of building a huge subscriber base, growing revenues by selling value-added products, expanding ad revenues by better targeting customers, and iterating on the sports betting opportunity. And that's exactly what we at Investor Diaries are so bullish about.
Now, what do we at Investor Diaries believe? Folks, you'll need to understand the difference between Fubo TV and Netflix. Both of them might appear to be in the same category of streaming companies, but they are not even competitors. The value proposition is quite different. It is this uniqueness in Fubo TV's value proposition that makes us really like this company.
Absolutely. And one of the things I wanted to highlight, Nitish, was if we are believers in Fubo TV stock, then we need to be comfortable with the volatility, because the volatility doesn't come from only one aspect of, say, the company having losses. It also is related to there being a broad-based market sell-off. And there are many detractors of Fubo TV. And I won't be surprised if there is a short report that comes out and Fubo TV prices again go down. But remember, in the long run, the company's got a great strategy. It's got a great future ahead of it.
That's right. As discussed previously, the stock has taken a massive beating. Its price is down 80% in the last year and 33% just since the start of 2022. The crash has it selling at a price to sales ratio of 2.5, near its lowest ever. It is trading at very attractive levels.
At the same time, it's actually putting strong results. So we believe that Fubo TV offers the investors a very reasonable risk versus reward opportunity. And remember, there are 72 million cable households. Now, this is huge to justify taking the risk with Fubo TV, and we see the stock price going further high back to its all-time high levels.
We are buyers of Fubo TV at these levels, and we think the company is poised for success in the long run. That's a wrap for today, folks. Thanks for tuning in, and as always, stay tuned and stay focused.